Tesla stock just keeps on going higher. It continues to impress many investors. But what if I told you, yeah, December has been a good month, but it's about to get a whole lot better at the same time. Here in this video, I will explain what is likely coming next for Tesla. I cannot say with any degree of guaranteeing or certainty of this, but I'll tell you what I think is coming next for Tesla. After all, Tesla is now up 69% year to date, and Elon Musk says that it was really just inevitable that this would happen. Now, I think it's important first to acknowledge what's driving Tesla higher these days. Yes, there's a lot of good news that keeps coming out for Tesla. New analysts raising price targets and putting out bullish commentary. All of that is definitely helping. We did have good news recently as far as the Tesla Model Q, some new details that did start to emerge, as well as we continue to get really good numbers out of China, confirming more or less that Q4 is likely going to be a very strong quarter. All of this is contributing to sentiment that is driving Tesla higher. Now, the sentiment is not just what's happening right here and right now, but it's the expectation that next year is going to be even better for Tesla than 2024. And let's face it, let's just be honest with ourselves. Whether you're a bull or a bear, I mean, next year is going to be a great year for Tesla. As long as we don't have a recession, as long as there's not some kind of alien invasion or black swan event. And some people are actually talking about aliens have come to Earth. You really can't make this stuff up. But as long as nothing like that actually happens, Tesla's probably going to have a pretty good year next year. And there's a lot of reasons to be excited about Tesla. Number one is obviously robotaxis, right? That is coming, but also deregulation and lower interest rates and new cheaper models from Tesla, megapack production that just essentially doubled with the soon to be completion of Tesla China's megapack factory, okay? Among other things, the Tesla Semi is supposed to be coming out next year, advancements with Optimus, XAI is doing some pretty cool things as well, not to mention. Like, there's a lot to be excited about, okay? That is what is driving the sentiment, and that is what is driving the current gamma squeeze in Tesla stock. Now, we have not, I repeat, we have not seen a short squeeze yet. If we start to see a short squeeze, that's where Tesla could get pretty parabolic in December. Today is the first day out of this rally for Tesla that you're starting to get some hints of a potential short squeeze that could be brewing. Here on the day today, you have about 1.2 million shares that are on net being covered today from hedge funds and institutions. What that means is you actually have 1.49 million shares that are being covered on, but you have 320,000 shares that are being sold short today. So minus 320,000 from 1.5 million, and you have 1.2 million shares on net that are being covered today. But that's really just a drop in the bucket compared to the 77.3 million shares that are currently sold short. And like you've seen today, Tesla up about 5% or so off just 1 million shares being covered. Imagine if 10 million or 20, 25 or 30 million shares were covered on. That's where things would start to get pretty insane. And that's what we could soon be looking at. As I have explained in multiple different videos now, if you're a hedge fund or institution, it's likely at this point you understand that Tesla's going to have a good 2025. And that's the reason why Tesla stock is moving higher right now. You probably know it's a gamma squeeze. You probably know momentum's maybe a little bit high right now. We could come down at some point, right? This is from the hedge fund institutional perspective. But if you're thinking about 2025, which is what everyone is doing right now, do you really want to be short on Tesla in 2025? Probably not. Now, as the book that I just recently read from Josh Brown, You Weren't Supposed to See That is what it's called. He explains in there that clients look at paying taxes in a very much negative way. They look at paying taxes as, a negative, which it is. But even if you made your clients a bunch of money, they still look at that tax bill and they go, well, that sucks, So there is this precedent to try to have your clients pay as little taxes as possible. So if you're a hedge fund or institution right now, and you have a lot of big gains that your clients are going to be taxed on, but then over here you have your Tesla short position. You've been hedging Tesla because Tesla has a higher beta than the S&P. If the S&P is up 1%, Tesla tends to be up 2%. If the S&P is down 1%, Tesla tends to be down, more than 1%, right? So a lot of hedge funds and institutions have opted to be long, the Mag 7, some other areas of our markets, but maybe be short on Tesla because you don't have to take on as big of a short position in Tesla with that higher beta. If markets do go south, your Tesla short position or Tesla should fall more than an Apple, let's say, and you'll be covered there, right? Well, now you have this big loss in Tesla, and you have a lot of taxable gains in other areas. It makes sense why hedge funds and institutions would want to cover on those short positions and have their clients pay less in taxes and not be short in 2025 on Tesla. It makes a lot of logical sense. Now, I don't know how logical hedge funds and institutions really are these days, so consider that. But really, from that perspective, it makes sense why you could see a Tesla short squeeze into year end. Like, it makes a little bit too much sense. It's almost too obvious. Now, again, I'm not a hedge fund institution. I'm not your mom, your grandma. I'm not a financial advisor. I don't have a fiduciary role to say the best thing for your financial situation. I'm sharing my own opinions here, okay? It just seems like to me, a short squeeze looks pretty likely at this point, especially as Tesla is now above $420 per share. Now, what's driving Tesla higher right now? Yes, it's positive sentiment. People are buying Tesla stock, of course, but there's a lot of option activity. And the option activity, aka a gamma squeeze, is what is really driving Tesla higher these days. You had 453 different trades from hedge funds and institutions today, totaling $410 million, with a positive order value of 85%. 85%. That's pretty extreme. If we look at the options expiring this Friday, you had 154,000 for volume at the 420 call. That's great. Okay, that is what helped push us to 420. Looking ahead, you have almost 20,000 for volume at the 420-250 call. These options are $800, right? This is mainly hedge funds and institutions that are playing with these, high dollar cost options, right? It's not a lot of retail investors going out and buying $800 options a piece. Definitely not 20,000 of them, at least I would suspect. Now, at the 425 call, you have 38,000 for volume. The 427.50 call, you have 10,000 for volume. And at the 430 call, you have 55,000 for volume today. You have 8,000 for volume at the 432.50 call, and about 23,000 for volume at the 435 call. Fast forward, skip ahead to the 440 call, you have 35,000 for volume, and skip ahead to the 450 call here, and you have 70,000 for volume today. So as you get to these important levels, as you continue to see this option activity striking on these important levels, like the 420 call today, the 415 call today, all of these are having really high volume numbers. It just pushes the stock higher and higher as market makers have to go out and buy more shares. More option activity, more options calls specifically going into the money means more market makers going out and buying more stock. So a gamma squeeze can last a while. Now, when you start to get a gamma squeeze and a short squeeze, things start to get a bit disorderly. They start to get pretty euphoric to the upside because, market makers, they can hedge their option bets in a way that as long as there's not like 100,000 options that get purchased at once, it doesn't tend to be as explosive. It just tends to continue to go higher, right? Let's just take a little bit of a gander at Tesla stock right now. It looks like a classical gamma squeeze, right? Every day's been higher than the last, and you just continuously are going up. Okay, that's a typical gamma squeeze. When you start to get these big gap ups and these big moves higher, like 20, 30, 40, in Tesla's case, it's going to be like $35, $40, $50 a day. Higher, right? That is more or less a short squeeze. So right now you're not seeing that. But pretty soon here, if short sellers do start to cover, you could see some gap ups, right? You could see another 10% day. You could see a, couple 7% days in a row. And even if you were to get 10% from here, that's going to put Tesla at about 465. And the gain to get to $500 from here is about 18.5%. If short sellers start to cover, you could be well over $500 by the end of December. I think that's the question. How many shorts cover? And how fast do they want to cover? And I said back in the summertime that I thought Tesla would close at new all-time highs, maybe even as high as $450. That then sounded pretty crazy because during the summertime, Tesla hit a high of $270 per share, right? People thought that was crazy. Well, you're almost there now. Okay, so prediction came true, not to pat myself on the back or anything, but I think there's a decently high, probability that this next prediction is going to come true as well. That is, Tesla is going to close this year above $500 per share. Could that be $550? Sure. Could that be $580? Sure. Could that be $500? Sure. Would I be surprised if we're like $480, $490 by the end of December? Probably not. That's still like $70 higher from here. So like that wouldn't be bad and I wouldn't be disappointed with being wrong on that kind of prediction. But the setup is pretty much as perfect as it could be ever for any stock. Okay. You're just set up very well right now. From all of the catalysts we have next year, from deregulation, from Elon being buddies with Trump, from new Tesla products, FSD, mega packs, the list goes on and on. Like quite literally, you could just list all these out. You'd have like 50 different reasons to be bullish on Tesla for next year. Now, I will tell you guys, what you really want to be watching for is the gap ups, okay? If Tesla starts to gap up, that is more than likely shorts covering on short positions. Now, what's fascinating about gamma squeezes versus short squeezes, what I've noticed over the years I've been investing, is gamma squeezes, again, tend to last a while. Tends to kind of just feed into itself over and over and over again. Whereas short squeezes, they tend to happen like all at once, within a day or 2 days or 3 days. So when you start to get those gap ups, that could be getting to the point where momentum slows down a bit, right? It could be 1, 2, 3 gap ups. If you get like 3 really good days in a row, you're probably getting close to the end, and at that point, you're going to be above $500 per share, right? So that's what you really want to watch for now if you're trading options, any short-term derivatives in Tesla. I will say, honestly, though, I hope Tesla comes down. I don't think it's going to happen, but I would love to buy Tesla at lower prices. So just keep that in mind. So let me know your thoughts on all of this information down below in the comment section. Have a fantastic rest of your day. Tesla's $425 per share, and looks like it doesn't want to stop anytime soon. So happy holidays. I guess if you've been long Tesla for a long time, this is probably the best Christmas present you could ever get, because we are back. Like, we are beyond back. We are at all-time highs. So again, let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.